All right, now joining the stage right now, put your hands together for the CEO of Harborside. Let's hear it for Ed Schmults.
Good afternoon, everyone. Thank you, Kevin. Hi, everybody. When I got here to Miami and I noticed that the Benzinga people in their wisdom had given this talk a title, which was an American redemption story. That was rather alarming because I thought this was a simple investor presentation. Reminded me of college, American redemption story, period, discuss, period. And you had to write for 2 hours on that. So as I thought about that, I think about the arc of Harborside since it was founded in 2006. And it's a powerful one in cannabis. I had someone yesterday tell me that Harborside was the first brand, like capital T, capital F, capital B. And I think that's right. They were tireless advocates for cannabis, for health and wellness, and for driving broader acceptance in the California community, and should be honored for that. Also great innovators as well. In the last 9 months, though, the company has changed significantly. 3 new businesses have been bolted on. Sublime, one of California's leading pre-roll and infused pre-roll companies last summer. Urban Leaf on March 1st, one of San Diego's dominant retailers. And then most recently on April 4th, Loudpack, with a collection of very strong brands and a terrific manufacturing facility. So the result is a very different company. So maybe the title is an American reset story because it's changed significantly. The company has what it needs to succeed and no more. We don't have excessive assets in any one particular area. So the reset can occur, and by that reset, we can live up to the brand promise to our customers and our retailers of consistent delivery of well-segmented and well-priced product. We can live up to the promise to our employees, have a stable place to work, to build a career, and share in the rewards as the company grows and achieves success. And perhaps most importantly, we can live up to the faith of our investors. And they can know that we're going to make the hard decisions that we need to make to get this company moving in the right direction. We're going to focus the business on doing a few things really well, and then we're going to execute. And we're going to execute as a team across this much bigger company today. So with that, what did we do? So we achieved scale, and by achieving scale in California, we were able to attract new capital. We raised $77 million in capital. There's no way any of the individual companies would have been able to do that without the scale that we recently achieved. We're a top 3 retail platform in California. I think for the short term, I like being in more retail stores, provided they are 4-wall positive contributors. Longer term, though, I like our brand portfolio. 9 brands. As California goes from 900-ish retailers to 1,000 to 2,000 to perhaps as much as 4,000 retail stores, that is a lot of shelf space that well-segmented brands are going to be able to capitalize on. I really want to dominate the bottom shelf and the mid shelf. That's where the money is. The top shelf always has an allure, but I think we can put brands in a dominant position, consistent, reliable suppliers to fill those shelf space. Retailers are going to trust that and are going to want to make us part of their open to buy dollars and part of their core assortment going forward. Next slide. So California, I think everyone here knows, it's the largest cannabis market in the world. Approaching $7.5 billion in legal market sales. The illicit market is probably half again or again as much. We've got 9 brands. We're taking a hard look at these brands. I really want to focus this company. Do we need 9? Stay tuned. We're going to make some decisions in the very near future on that. So when I talk to a lot of people at MSOs, they always say they're afraid of California. And this is really what I think they're afraid about. They're afraid of compliance in a rugged regulatory environment. They're afraid of taxes, but aren't we all? They're afraid of California employment laws, certainly a challenge, and they're afraid of competition. So you look at 7,800 cultivators, over 1,000 retailers, anywhere from 1,300 to as many as 2,000 brands out there. And sure, it is tough. But 40 million people live in the state, 20 million between 20 and 50. I mean, this is where you need to be, and this is cannabis's future. I came out of mainstream retail. I was in the outdoor market. I thought that was tough. I spent a little bit of time at Esprit, the women's clothing company. Holy shit. Women's clothing and footwear is just the worst. Those people will rip your heart out. So this is coming to cannabis. This type of competition, this type of brand positioning, and I think if you're an operator in any other state, you need to be looking at California to know what your future holds. And you need to be thinking now about how to compete and how to prepare your cost structure, how to prepare your brands, and the way you communicate to customers so you can be successful in what's going to be a much more competitive environment across every state. You know, the vertical nature, I think, of our business now can't be overstated. It's incredibly powerful. We get economies of scale with our size. We expand the opportunity for tax strategies between cultivation and manufacturing and retail. It insulates us somewhat from the market gyrations that occur in California. And then it gives us an opportunity to really achieve that consistency. You're going to hear me say this a lot. Having been a retailer with 1,300 brands, if you stumble as a supplier to a retailer in cannabis, you have 3 months, 6 months, 9 months of good delivery, and then powdery mildew, mold wipes out some harvests. You don't get to, hey, I'll be back in 3 months and expect to get the same shelf space. You got one chance. And being able to relentlessly produce quality cannabis products at the price quality level that you want to compete at is the only way you're going to be successful in such a crowded market. So it's that relentless consistency is what we're striving for. We've got strong brands across a number of different categories. I'm not going to beat my chest here and say, you know, we want to be number one. Sure, I'd like to be number one, but oftentimes as you try to do that at the margin, it gets so expensive. I love a top 10, top 5 brand presence, gives you ability to move up with new products and new introductions, but trying to eke out and beat somebody to be number one, I don't think it's, I don't think there's a reward there for that. Our retail presence is comprehensive. We're doing a number of things here to build out and simplify our retail approach. All the Harbourside stores will be rebranded Urban Leaf stores, except for the Harbourside Oakland store. We're keeping that Harbourside, that's sacred ground, right? That's where it all started, sort of an homage to all the work that Steve and Dress did in those early days. That store will remain Harbourside. But all the rest will come under the Urban Leaf umbrella and will adopt the Urban Leaf operating model. We think we have a really solid in-store experience. We train our bud tenders relentlessly, and I look forward to seeing the impact as we complete this exercise over the summer. We are going to really focus on accessibility, online order, in-store pickup. We're going to reduce friction points. Customers can come in and get out very easily. And then home delivery. I like to think of our stores as hubs for home delivery in the surrounding zip codes. And we're rolling out a common technology infrastructure. Last summer at Urban, we rolled out LeafLogic's POS, iHeartJane, e-com, and then on-fleet, last mile delivery. We'll be doing the same thing with the Harbourside stores, and we'll have that completed by the end of August. Diversified product offering and private label. Currently today, 40% of Urban Leaf retail stores' sales come from their own private label product. So we're going to adopt that model. Having 40% private label, Urban Leaf in the first quarter achieved record gross margins in what is an extremely difficult retail environment. So I like the opportunity to drive additional gross margin gains by adding more private label products to the retail mix. And then I think kind of an underappreciated aspect of our retail footprint is retail complements wholesale. We can test new concepts, new ideas in retail, and if they're successful, arm our sales team with that data to say, hey guys, we just rolled this out in 15 retail stores and it achieved X, Y, and Z. You're going to want this in your stores across the state. It's a very powerful tool, and I look forward to seeing the results of that. If you haven't been to California, we have a very clean retail store model. It's all about the product. We don't want to have design elements that distract from the customer experience, that interaction with the bud tender, and their ability to look and see the product. As a retailer, I'm all about testing. Retail, you test, you try new concepts, you read and you react and you move forward. Extremely important. Rolling up California, tremendous opportunity. It's really tough out there. We're seeing a lot of M&A opportunity. In some ways it's sad. People have worked long and hard, and some of them are throwing in the towel right now. But it's a sort of a flushing that needs to happen across every segment in California cannabis. And we're going to be thoughtful about it. We're looking at retail opportunities with good leases and good locations with good adjacencies. Not really interested in adding more brands, but if there's a category leader, that's certainly something that we would look at. Our cultivation platform, we've had a new head of cultivation in there for over a year now. He's continuing to enhance yields and the quality of the product. We're looking to improve genetics there. That is a powerful tool for us. It's on a perpetual harvest cycle. Every week we get fresh product coming out of that facility, 36,000 pounds a year, and I'm looking forward to continuing to rely on this facility for a steady flow of quality cannabis. I think the heart of this operation is the former Loudpack facility in Greenfield. It's a 50,000 square foot manufacturing facility, can make everything that we do today. It's important to note, Urban Leaf, we moved the manufacturing to Loudpack in January. We closed down our manufacturing and our distribution in January. Unfortunately, we let the employees go who were doing that service for Urban Leaf, but that integration has already occurred and received rave reviews from our retail store team. The way the product's packaged, the accuracy was a significant improvement, and I look forward to continuing to benefit from the professionalism of our Loudpack brothers and sisters there in Greenfield. Here's a simple case study on the benefits of verticality. If we're buying weed from ourselves, manufacturing it ourselves, and bringing it into our stores, we should be able to achieve over 70% gross margins on our own private label products. And recall that I said 40% of our retail store sales are now expected to be our private label products. That puts us in a really strong position for financial performance and to weather any storms that occur in California retail. I'm trying to leave a little bit of room for questions. We think we're one of, if not the largest publicly traded operator in California. We're hard at work on the integration piece. We've got it calendared out across departments. The executive team is nailed down and moving forward. Revenue growth from consistently being in stock. That's something we're looking forward to seeing what's going to happen when retailers know they can rely on us week in and week out. We're going to do brand segmentation so we have no overlaps, so it's very clear to the retailer and to the end customer what each brand is for and who it targets. On the gross margin, driving that private label business to 40% is going to have a significant upside potential, as well as what you saw on the previous slide, making it all in-house. And then cost optimization. We're going to be really aggressive on our SG&A. It's not just about overhead rationalization and not needing 3 CFOs and not needing 3 heads of HR, but really looking through and changing the processes across the entire organization. And we anticipate having some announcements very soon about the impacts of that. We think we're pretty attractively positioned relative to other California public companies. I do have to apologize. This is 3Q data. We're announcing our 4Q and 2021 data numbers next week, so we weren't able to put them in this for obvious reasons. Capitalization, we're in pretty good shape. I love the $42 million in cash on our balance sheet. That's a real strength today, and we're working hard to do something about the stock price. The valuations, particularly relative to peers, are poor. Part of that is just due to needing to get the story out, which is what I'm doing today and we'll be doing in the future. And part of it is execution. we need to earn our worth, and we need to execute and hit our numbers and continue to grow and develop this company. I do want to point out the numbers on here are not guidance. These are numbers we've gleaned from existing analyst reports and put them in here for your edification. They're not from the company. Lastly, the team, probably the most important thing. Across all the team, my direct reports in the C-suite as well as vice presidents. I think we have 7 from Urban Leaf, 6 from Harbourside, 3 from Loudpack. You see some of the core team here. Tom, Amr, and Jack from Harbourside. Mark and I have developed a terrific relationship, Mark being the former CEO of Loudpack. I enjoy working with him day in and day out. Dina and Will, I worked with for over a year at Urban Leaf and have a lot of trust and confidence in them. And then Robert Bakke in the lower right corner. This is my 3rd go-around with him. He's our Chief Technology Officer, and I'm very high on Robert Bakke. He is just a machine, and it's going to work to stabilize our technology base and build us a rock-solid foundation. So there's one version of the truth. We have good access to our data and are able to manage with data and with the appropriate conclusions. We've got a strong board, a mix of operators and financial executives. We're adding another operator to the board. A woman will announce that in the next couple of weeks. And we're all aligned and focused on making this company strong, successful, and profitable. I'm old school. We need to be not adjusted EBITDA positive, we need to be net income positive, and that's what we're working towards. So with that, we got a minute and a half, so if anyone has any questions, I'd be happy to take them. I don't even know if that's allowed anymore. Kevin, are we? All right.
Got a question, we'll take. Let's give a round of applause there one time. Good for him. Thank you.
Yeah, Harry Brosford. I'm an analyst with the Cannabis group. I was just doing a little research on your company, and it looks like, is it correct, you just started your job as the CEO? Yeah, in early March.
Yeah, so I came from, so I've been in cannabis since 2018. I ran a company called Calyx Peak, a small multi-state operator with operations in California, Nevada, Ohio, and then pre-licensure Massachusetts and Missouri. And I joined Urban Leaf February 1st of last year. We worked hard to focus that business, to right-size it, made some significant improvements in their operations, and through this M&A activity, we've been working really since the summer with Harbourside and Loudpack to make this happen, and the board, fortunately for me, selected me as the go-forward CEO. So yes, since March 1st, but I've been kind of in this business for a while. Yeah.
All right, we got time for one more question. I saw a couple of hands raised there. A question and anyone wants to ask? I swear I saw more hands. Okay. All right, well, I got one.
All right.
We got some pre-submitted questions for you, Ed. I'll just ask one of those really quickly.
Sure.
Not sure if you focused on this in the presentation. I was in the back. I want to get the question here. It says that the organization has made a few acquisitions recently. Tell us a little bit about them.
Well, so that was the whole, I think the crux of the presentation was, you know, we wanted to achieve scale across cultivation, manufacturing, retail, and distribution. So we bolted 4 companies together sequentially. And, you know, the last closed on April 4th. I do think it's important to note that we've been working on integration since really the day after we announced the deal at the end of November. So a lot of the integration work, some is done, all of it is ongoing, and we are working to a tight timeline. Time is money, and we need to perform, and the way that's going to be successful for us is to get integrated and aligned on common goals and to make that happen. So that's what we're doing.
Awesome. CEO of Harborside. Let's hear it one more time for Mr. Ed Schmults.